up, everyone? Thanks for joining me on D's Analysis. We're going to be looking at Bitcoin today. We're going to be looking at short-term price targets. We normally focus on long-term price targets and levels of support and resistance, but today I want to go over some short-term just to show you guys how I kind of draw support and resistance and what to look for. So usually you're just trying to find where you can get the most touches. So I usually look at the end of the body of the candle. This is the body of the candle, and I look for the wicks, and I kind of see where all these wicks meet up, and I kind of can see like an imaginary level, and I draw out what I see in my head, and I see something like that where you see these touches, breaks above, and it has a touch here, a touch here, broke through, a touch here, touch here. You see how it was resistance, support, support, resistance, resistance here again, and so on. So when it comes up to this price, it could be resistance or it could break through and continue like we did here. We break above and retest. And on the flip side, we look again. Sometimes it gets a little tricky because sometimes it looks a little messy where you have like a bunch of touches here, but then you have the bodies of the candles. So sometimes you can draw something through here if you wanted to. But sometimes instead of doing that, I would just move it to the next level. I'll do the same thing off the body of the candle. I try and touch all the wicks together, get as many touches as possible. Kind of have something like that. That's what I see drawn out recently on the 1 hour. Then you can go on the 4 hour and kind of tighten up the zones. You can get a better view because remember, higher time frames are stronger. So you can tighten up your zones here and then go back on the 1 hour. You have a better, more accurate zone. So this is kind of where I see you want to box price up and make it into a range. So when price meets these levels, it makes a decision and goes one way or the other. So we could continue chopping, get up to here, maybe stall out a little bit, break above, retest, and then move up. And you're always looking left. So here, after we crack 85 or 84.9, the next level I'm seeing is 86 because this is a clean move. This is an engulfing candle. So I'm just seeing a level like this. That's it, essentially. So you're always looking left. If you were to take a trade, this is how you take trades. This is how you set price targets. I'm not really a trader. I mean, I can trade, but I like to long-term invest. It's less of a headache and just easier in general, in my opinion. But you would see something like that because it might kick up some momentum and buyers will take over and push price to this next level where now you can either chop or continue depending on the volume that Bitcoin has here. And then on the flip side, you can see something where price could, chop, break through, retest this level, and then continue on down. And if we were to see something like that, the next level I would see here would be, see this one's not as clean because a clean move when you look to the left, this is an engulfing candle. So this is pretty easy. You're like, hey, next target's up here, 86,000 or so. Here it can be a little tricky. So with this one, you'd probably chop a little trying to get to your target, but sometimes you have to keep looking further left and try and find the most touches that make sense. So you could probably go with something like this here. And even then, it might not even be accurate because it's more choppy, so it's not as clean. But that kind of makes sense to me. So if we were to break here, the next target could look at something like that, or fall underneath, retest, and touch that next target. And then the next level after that would be 82. See, this one's easy. This is an easy one here. You can just go the body to the wicks, and it meets all the wicks here. So this is an easy zone to draw. If we were to fall underneath 82.5, the next level would look something like that, where we break, get a retest, and push to the next level. Or we might break this and make it all the way down here instantly instead of even getting a retest because of the clean move. And the same thing here. If we break 85, could be a chance we get a nice engulfing candle, but nothing's ever guaranteed. We could still chop. Even with the clean move to the left, you can still chop on the way up. Now we're going to go back to what we normally look at, long-term time frame. Have something like that here for the trend line. So we still have our long-term trend line that we've been established since August 5th. Got multiple bounces off of it. We broke, got the retest, pushed off, and now we have this minor uptrend here on this trend line. But I also do see kind of a bear flag being built. I'm not saying it's going to play out, but it's possible. So we could see something like that. Kind of looks like a bear flag, and then the same way that we draw the legs, we could take that leg and move it to there, and that your flagpole would measure down to this $72,000 level. There's not much. If you break 72, you'll probably see 67. That would be the next level, because there's little to no traffic when you look to the left here. We also do have a trend line that's been established since January 20th, inauguration. We've been on a downtrend ever since. So we could be pushing up just to retest this again and then continue on down. So we could see something where maybe we chop sideways into this trend line and then continue on down. On the more bullish side, maybe we chop and then we finally break it, retest, break this level, retest, and continue on up. But once we reclaim this long-term trend line, I think that's when we really can start taking off. But at the end of the day, this is just a huge range that we've been in since the end of November. Just been range bound this entire time. We felt underneath the range since February 25th, but we were range bound for months. So let's see if we can get back in the range, start playing at the top of the range, and continue and break to higher prices. Let's see if the weekly we can get a little bit of bullish momentum and either close at least halfway of this engulfing candle or reclaim it. That would be nice if we can get a nice engulfing candle, but green right here. That's all we can hope for, but I think we still look good. I think it's just a temporary pullback, a pullback of 30%, which coincides with all the other drops in the previous bull markets. So this is nothing new. This is crypto. This pullback that we got almost touched this local high here, which it does in previous cycles as well. On the Bollinger Bands, we're looking good. We got a bounce off the weekly, off the green band. It's a lot of support underneath price. On the daily, we pushed to the blue band and we fell back underneath it. So let's see if we can reclaim it, get a bounce off of it, and push to the red, which would line up with this trend line, which could be a continuation of the downtrend. We'll see how it plays out, of course. On the SMAs, on the daily, we just fell underneath the 20-day and the 200-day. So that's definitely not a good sign. We want to take over the 200-day moving average. This is a strong level of support and resistance. So we want to reclaim that, get a bounce, and move up to this 50. And the 50 also plays in line with this trend line. So this trend line is going to be hard to break, but once we break it, I think we could really get a move. We could get a move quickly to the upside, back to this trend line. And then that's our next obstacle. On the weekly, we got a perfect bounce off the 50-week. That looks perfect. We almost got a bounce here, and we got a second bounce. So this looks good. Hopefully we can push far away and then break through the 20-week moving average and continue on up. Volume's been dead for some time now. It's just been decreasing significantly. So price is just compressed. It's not really doing much. So the next breakout is probably going to be pretty large, I would imagine. Because the longer price is compressed, the larger the breakout is. The MACD looks great. We're creating higher highs, higher lows, pushing up, and we're creating new green candles and pushing back to this positive territory. On the weekly, we're bearish, but it can always turn back up and have these lines start to curl in the opposite direction and start going back up. In terms of Fibonacci, from this leg here, we're getting a bounce right off the golden zone. Perfectly played out right now. So we'll see how it plays out completely, but as of now, it looks perfect. We got the 0.5 here and the 0.618 at the bottom. It's a strong level of support to continue the price action to the upside. So let's see if it plays out and we start creating that momentum. Another thing to note is global liquidity tied with Bitcoin, that there's some kind of lag, and it's been about 77 days, 11 weeks. The lag window usually closes within that time frame. So you can see global liquidity goes down, Bitcoin starts to go down at around 98 days, or you could say 90 days there, 13 bars. Same thing here, global liquidity goes down, 70 to 90 days from this peak where it's going down to Bitcoin's peak where it starts to continue on down. And you can see that example happening multiple times throughout. And sometimes they're tied together, but most of the time global liquidity leads. Another example of it leading here, it found its bottom here, and about 80 to 90 days or 12 to 13 bars on the weekly, you see Bitcoin find its bottom and continue up. So we have this sharp move up while Bitcoin's still been going down, but this move down is just the trail from this move here. So global liquidity led, now Bitcoin's following. Global liquidity leads again. Now let's see what happens. Maybe Bitcoin follows and it does exactly what global liquidity did. So something I wanted to touch on was the pi cycle top indicator. So when the lines cross or get close enough, this green line and this red line, when they get close enough, that usually calls the top for the cycle. So as you can see, we're very far from that even happening. So we still have much to go according to this indicator. It doesn't mean that it's 100% accurate, of course. I'm just going to show you two examples when it's played out, and you can kind of see they weren't close. And as they began to get closer and they crossed, that was the top for the cycle. And again, they were far away from each other. And as they crossed, this time they crossed a little bit less. The first time there was more of a significant cross. This time it was a little bit less. Right when they touched, even if you did it here, you're still close to the top. But the actual cross was here, and you got that top at 62,000. Granted, yes, I know we had the second top at 69. You were pretty much spot on. I'm sorry, 64,000. I couldn't see it because this was in the way. So it was 64,000 or 65,000, the first top here. So now, here in 2025, we still have some time to go. So let's see how this plays out. I can just do a rough drawing. It's going to be inaccurate, of course. This is just a rough drawing. The dates are going to be off where the lines line up, but I just want to show you what's happening because the lines are getting further and further. They're kind of like regressing a little bit. So let's say we get something where we have this green line and then we have this red line here. When it finally goes up, since they were crossing before, maybe this is all we get. It was close, but it never actually touched. And that would be the top here. I'm not saying it's in August or anything like that. I'm just drawing so you can see what I'm trying to say. That it may not cross this time like it has in the past because we're starting to see that pattern. But the first time it crossed completely, the second time it barely crossed, and then they separated. And then this time I'm saying that it's probably not going to cross. But when it gets very close, that will be the top. And then they start spreading again. And then we get our bear cycle for the year, the following year. And then we rally for the next 3 years after that bear cycle. So that's how I see it playing out. This is how the pi cycle top indicator works. So that's something to take note of and keep it in your back pocket so you can use it as another way to determine where the top may or may not be. That's all I have for you guys today. I'll see you in the next one.